If you've been keeping up with the Bay Area housing market recently, you're probably at a loss. You don't understand. How is this even possible? How is it that prices are going up? We have a multiple offer market going on, but at the same time, interest rates are almost as high as they've ever been. Well, in this video, we're going to be going over some historical data to help make some sense of all of this, and at the same time, use this data to help make predictions for what to expect in the Bay Area housing market in the coming months ahead. For those of you who are new to the channel, my name is Danny Gould. I'm the CEO of the Selling Silicon Valley Group. Over the last 8 years, after graduating from Stanford University, I've helped well over 200 families and sold well over $200 million worth of real estate here in the San Francisco Bay Area. Check us out online. We have over 250 5-star reviews on Google, over 100 5-star reviews on Zillow. And in this video, I'm going to be going over the thing that I like talking about the most, which is housing data. And more specifically, how this housing data affects you as a home buyer or a home seller in the Bay Area marketplace. But before we do that, before we get into the data, if you're a home buyer in today's marketplace, you're trying to figure out, is now the right time for me to buy? And if I do buy, what price should I be offering when I buy a certain property? Or what can I expect when buying in a certain neighborhood? You can text the word data plus the area or the neighborhood or the zip code that you're looking in, and we will get a comprehensive data set sent straight to your inbox. If you're a home seller in today's marketplace, you're trying to figure out, is now the right time for me to sell? And if I do sell, what should I price my property for? Because as we know, pricing strategy matters so much, especially in the market that we're in right now. You can text the word data plus the property address to the number down below, and we will get all of that information sent straight to your inbox. Now, if you watched last week's video, I already shared this graph that's coming up on the screen right now, which is Santa Clara County housing data for the month of July. So looking at June of this year, we have 899 homes pending on the market right now and 802 homes active. So pending is outpacing supply. And this is a trend that's been going on since February of this year. Now, anytime that we typically see pendings outpace supply, what does that mean? It's a white hot market, great seller's market, great time to be a seller, and not so great time to be a buyer. But how is this possible? I mean, after all, rates are sky high and it doesn't make any sense. Well, the rates are keeping buyers and sellers at bay, meaning a lot of people aren't selling their home right now because they're locked into a really low rate. And to sell would mean that they would need to buy another home at a higher rate. And they don't want to do that right now. So that's keeping a lot of inventory off the market right now. And of course, buyers at some point, they need to buy, right? Like if they don't have a house, they're like, hey, I'd rather pay 7% interest to the bank than 100% interest to my landlord. And so at a certain point, there is a aha moment for some of these buyers. And that's why we're seeing pendings outpace supply. Now, if you watched last week's Silicon Valley Snapshot, you will know that the main driver right now in the Bay Area housing market is not demand at all. It is absolutely 100% supply. Supply is so low. Let's compare what is happening right now to the summer of 2017. Now, if you want to go back in the DeLorean and go back 6 years, if you remember, if you were around 6 years ago, you'll know 2017 was one of the best markets for home sellers in the history of the Bay Area. Multiple offers on pretty much every single home. Sellers could pretty much name their price and the buyers would pay it. And what I want to compare is what is happening right now to what was going on in 2017. So looking at June of 2017, we had 1,561 homes pending. So basically, I mean, almost double the amount of homes pending and 1,079 homes active on the market. So if we look at the spread, obviously the delta, the difference between pending and active inventory was much higher in 2017. So the market conditions in Santa Clara County were a lot even more in sellers' favors than they are right now. If you look closely at this graph though, you'll see that things started to turn in February of 2017. Sound familiar? And in February of 2017, we saw pendings outpace supply in Santa Clara County, and that didn't change for the entire summer heading into the fall. In fact, this number did not change until June of 2018. We had 15 months of pendings outpacing supply. Now, it's not a guarantee that this will be the same case here in Santa Clara County, but the market has proven that it is capable of maintaining this kind of environment for a long time. We've seen markets before where it's been white hot, meaning pendings outpacing supply for over a year. One of the things that really stands out to me when analyzing this data is looking at the inventory levels right now versus where they were in 2017. And in 2017, the biggest headline was like how low the inventory was. It was already exceptionally low in 2017. Yet now in 2023, active inventory is down over 20% from that benchmark there in June of 2016. In fact, it's actually almost a 30% decrease in active inventory from June of 2017 to June of 2023. That's nothing to sneeze at. And if that continues, it's going to be really hard to imagine a scenario in which pendings dip below inventory levels. Now let's consider the East Bay. And what I did was I pulled Contra Costa County and Alameda County combined because they're very similar in nature. They follow almost the exact same trends. So it is not a bad data set to pool. And so when we pull Contra Costa and Alameda counties together, we see that here in June of 2023, we basically have a net neutral, 1,623 homes pending versus 1,602 homes active. So pendings outpacing supply just by a little bit. Now, the interesting thing is, let's look at the pendings versus actives in 2017 for the same data set where we combine Alameda County and Contra Costa County. And the results are pretty fascinating. First of all, notice that active inventory is much higher in 2017 when compared to now in 2023. We have 2,654 homes pending and 2,606 homes active on the market. Over 1,000 less active homes on the market across two counties between 2017, which was already very low, compared to where we're at right now, which is exceptionally low. Now, something to point out, even though 2017 was considered a banner year for real estate here in the San Francisco Bay Area, we look at what happened in July and in August and in September and October. We basically had months of fluctuation where we were coming in and out of that white hot status where pendings dipped below active inventory in July. Then we have pendings coming back up above active inventory in August and then back below in September and then back above in October. So we have this this oscillation, this tug of war between pendings and active inventory. And I suspect, given the market conditions right now, that we're probably going to see something pretty similar in the East Bay here in the coming months. So this is something to pay attention to because one of two things is going to happen. Either we're going to see this oscillation and it's going to be very similar to what we had in 2017 and the market conditions are going to feel similar. Because even though we're not in the same market, the conditions feel similar right now to how they did in 2017. Just having been in it for as long as I have, I saw what it was like in 2017 and I'm seeing what it's like right now. And it feels pretty similar from a buyer's perspective. The other possibility is that we buck that trend and either we see pendings consistently outpace supply or we see pendings stay below active inventory and we move into like a little less of a white hot market. But even if we do, the data is showing us right now that as long as pendings are within a certain percentage of active inventory, it's going to feel very similar to how it did in 2017. And so right now in both counties, in Santa Clara County, or in all three counties, in Santa Clara County, Alameda, and Contra Costa, we are seeing the market behave in a very similar fashion as it did in 2017. And if these trends continue, then I would expect the beginning of 2024, February, March, and April of 2024 to be an exceptionally good time to sell your home. Now, a lot of things could happen between now and then. Interest rates could change. We could see the economy isn't doing amazing right now. And so we could see some of that come into play here. And we could see some of that negatively impact the real estate market here. Even though traditionally during recessionary periods, we start to see housing prices increase. That could not be the case because typically we'll see housing prices increase after a period of time once the Fed has adjusted interest rates to combat the slowing economy. So lots of things to think about here as we move on into the later half of this summer market and into the fall market. We're going to continue to pay attention to these trends. This won't be the last time that I share this data with you. This won't be the last time that we share and analyze the data in this way because it's a very powerful way, a very powerful crystal ball, if you will, to look into the future by looking at the past. Because as we know, history tends to repeat itself, especially here in the Bay Area housing market. It's the same 2 to 3 narratives that play themselves out over the course of a 5 to 10 year period. So if you're not already subscribed, what are you waiting for? Click the subscribe button, hit the notification bell, give us a thumbs up to get notified every single time we post a new Silicon Valley snapshot just like this one. Do yourself a favor, stay ahead of the market by watching the data and by analyzing the data and by understanding the data in real time. That's what we do here. This is Danny Gould, everyone. I'm selling Silicon Valley, and I will catch all of you in the next video.